Hello, viewers. Welcome back to another edition of Stock Views for current month, March 2025. We're going to cover a few sector rotations, SPDR ETF, and good dividend paying stocks. Let's jump into the sector rotation first. Past couple of weeks, the market has been not doing very well compared to previous months. It is in a cautious downturn, I would say. It's still not convinced that there is a recession going to happen, but it's kind of in between state where investors doesn't want to invest money in the market. They want to keep it in the sideline until they hear some concrete directions in, or until they see some concrete directions in the market. But the first thing for a normal investor, an individual investor, the first thing to look at it is what sectors are performing. That's my first step in my investment research. Every week I do that. First thing I look at it is looking into this website, which is the sectorspiders.com/all sectors. It gives you all the sectors where the spider ETF has been invested in the sense that their funds are distributed in all these sectors, and you can see the volume, how much volume is being distributed across each sector. You can trade these ETFs individually too, but they also roll up under kind of a spider ETF. So spider ETFs are the funds which are distributed across all these sectors. Now, if I want to see the performance of each and every sector, there's a performance tab. It clearly gives you how it has been performing. Some of these stocks under spider ETF, it gives you a good gauge of how they're performing past month, last quarter, year to date, and a past year. That's a good indication for us to see where the funds are moving. So looking at the past 1 month, you could see that the consumer staples relatively growing well, even though the market was in a downturn. You could see some of these leaders have been holding up that growth. So that's a good sign, which means that some of these funds are moved into consumer staples. Again, the second thing is top in the list is 4%, which is the real estate market. And then the third one is the energy sector. So these are the top three sectors. Past 1 month has been performing kind of decent one compared to other previous months. But looking at the quarterly results, you could see that the financials have been performing very well. So if you're not a short-term investor and if you want to keep the funds in a long-term model where you get good dividends and other stuff, this is a sector to look at it. You see that there's a good growth between healthcare and financial. There are like 8% growth in that last quarter. And then the second one, which I guess the energy sector seems to be the third one, and then the rest of them fall under the other areas. So I think these are past quarter. These are the three top sectors have been performing well, and this is an indication for us to know that these are the sectors to go invest in, right? As an individual investor, first thing to look at it is this: look at the sectors. How are they doing it? What are your leaders there? So I think that's the next step. Like you got the sector-wise performance here. Let's take a look at this last quarter. Financials have been doing well. Now if I want to drill deeper into it, so click on the financial. It tells you it is a 14% allocation in the overall Spider SNMP ETF or Spider ETF. It is a overall 14% invested in this particular sector, and the performance of that is you could probably drill down deeper, monthly, 3 months. How are they doing? Right? You look at the green one is the actual the financial ETF performance versus the black one is the overall spider performance. Now, it also has the complete holding list. It gives you a list of all the companies where the funds are invested in. So you can go drill deeper into it, saying how are these these individual stocks are performing inside the financial sector. You can download the Excel file, use all the Excel filtering, sorting mechanism, find the performing leaders in this list, and then see how to invest in those stocks. And this is my first step of investment. Let's go back and look at other sectors in the spider ETF. Some of the other sectors, I always look at the performance tab. So the next performing sector is the healthcare. Healthcare is more isolated sector. You really need to know how these healthcare companies are performing, what their products are, especially the medicines which they distribute to their customers. You need to understand their growth path, performance, margin. There's so many aspects tied up to those kind of products, and especially if you are very familiar with the healthcare sector, then it's an option for you to go invest in some of these healthcare sectors. Obviously, you could see that it has its own holdings. There are a bunch of them, very well known. Eli Lilly is one, Johnson and Johnson, United Health Group, and you could basically export this data into an Excel, sort it out, filter it, pick up the top performing one, and basically those are your leaders to go invest in. So it's kind of an isolated sector. it requires an additional knowledge to go invest in healthcare. Again, some of these companies have very good product outside. And yeah, so take a look at some of these sectors. This is a very good website to go look at how these sectors are performing, and look at their leaders too. I always just drill down in each and every sector, understand where the holdings are, and based on that, look at their leaders too. So some of these things. Again, next one is the real estate one. You could see that it is a 2% of the whole spider ETF. Generally, spider ETF, the fund managers distribute money based on the performance. Past couple of years, the real estate was not doing well, so they've actually reduced the funds in this sector. But if you look at it, they currently have 2.23 percentage of invested money in that sector. And if you have this concentrated investment, definitely they would have invested in the leaders in that sector. So if you go into the performance part of it or just the holdings part of it, you could see some of these bunch of these companies who are doing well right now. That's why Spider is invested in these companies. And you can just export this data, filter it, sort it, and then take action. If you want to invest, find the leader in this sector, see whether how they are giving the dividend, how they are growing first thing, how much dividend yield they have, and then invest in some of these leaders. We have seen all the sectors under the S&P ETF. The next thing to look at it is just directly looking at the Spider ETF itself, see how it has been trending. Since February mid onwards, the trend has been negative. Definitely, we have seen that. You could see that the price movement here, it has been downwards close to 12 points, 12 percentage it has lost. So from it has hit the peak, which is 612 something, and then from that point onwards, it is in the downward trend. And looking at the volume, some of the indicators are the volume indicators. Volume indicators, you could see that mostly there was more distribution than accumulation. Past couple of days, there was a couple of accumulation there. Again, it is just a way market attracts the individual retail investors to invest back into the market. Don't get carried away with it, just stay in the sidelines and see how the trend is evolving. And for now, I think the trend is in the downward direction. If you look at, if you have heard the Fed chair last week interview, again, he's been a little bit cautious. Majority of the impact, the negative trend, was due to the tariffs and other inflation problems. I believe the tariff problem is going to continue. There is still a trade war going on with Europe and other countries. So that should still continue. We should see few more corrections happening in the stock market. S&P is a good indicator for us. You could see that it is in the negative trend. It will have a choppy run for a couple months. I would say the whole year it's going to be like this for now. So look at some of those sector investments to see who are the leaders in those sector investments under S&P 500 ETF, and then try to move your funds into the respective the leaders. If you have seen my previous slide, financial is doing better, real estate is doing okay. Then we have healthcare is doing far better than other sectors. Energy is doing far better. So find the leaders in those sectors and invest. And again, some of these pullbacks you're seeing positive way or positive direction pullbacks, those are, I call it as a market game. Okay, uh, as an individual investor, retail investors, be cautious on some of this pullback. So when you see a positive momentum in a downward trend, it's kind of a pullback. I would consider it as a pullback. So be cautious that we don't know to what extent it will pull back. So if you put the money or if you invest the money back into the market, there's a good chance that you might lose few more points there. So if you look at this trend, the next stopping point would be around 539 something. If the trend continues, we should see the next stopping point will be somewhere around 510. And that's going to take some time, couple weeks, couple months, we don't know. But keep an eye on this one ETF. And again, if you have seen my previous videos, I've actually called out the box theory here. If the price movement is sideways, we generally call it as a churn. When there is a churn happening, I always put a minor churn and a bigger major churn. So I usually put the box for the minor ones, figure out what the resistance and support level is. That helps me to stay invested versus pull the money out. And especially for dividend strategies and other stuff, again, if the company is very good, ETFs are very good, and they pay you a decent dividend, you don't need to worry about what the overall market trend is. You still get your dividend from these companies. There will be some level of fluctuation in the dividend amount which they pay, but still you'll be getting a passive income from some of these companies. So I usually look at this box theory as one of my key indicator to see what's the resistance and support level, and whether to invest or not to invest. And I have the major box again. If you have seen the trend, the major box also highlights the resistance and support level. Overall, market is in the negative trend, which is very evident, and there is a talk going on. If you have seen some of the social media and other medias, there's a talk going on saying there's a 15 to 20% recession chances are there. If you have heard Fed chair's last Wednesday's interview, he's not buying into it, and and personally I also don't buy into this recession part unless it is proven. So there's some level of cautious investment going on right now in the market. People are having more cash in the sideline versus invested. So overall, I think the market is not doing well. So as a retail individual investors, stay away from some of these negative sectors and invest in some of the positive sectors like energy, healthcare, financials are doing well compared to all other sectors. And then real estate is another one which is kind of catching up slowly. So these are our key sectors to look at it. Look for those leaders and see if you can invest in slowly. Not to, don't put all the money into those sectors yet, because you could see some downturn in some of these some of the other sectors too, some of the growing sectors too. So watch out for that. For now, it is in downtrend. Keep watching, keep your cash in the sideline. Once you see a clear indicator that the market has turned back to the positive direction, then find the leaders and invest in. The next stock we're going to look at it is, we have seen the Spider ETF. We're going to look at the next stock, which is again a dividend paying stock. If you have seen my previous videos and the future videos I'm going to publish, most of these videos are going to talk about dividend stocks. One of the dividend stock which I've been monitoring for a couple of months is this Enterprise Product Partner LLP. So this company is, again, it's called as a midstream company. Their primary business is to store, process, or generally transport from source to destination crude oil, natural gas, and other stuff. They pay you very good, decent dividend, close to 6% dividend, which is a pretty decent dividend. If you have invested here, you are definitely getting somewhere around 5 to 6% dividend on a regular basis, annual basis. And they've been performing well. This company has been there for a very long time, and it's a quarterly dividend paying company. There was some spike downwards in the pandemic time, but the overall, the company has been paying dividend for their investors consistently, and the dividend was also growing because the price was also growing. If you have seen the positive kind of a trend, overall trend since pandemic, it is always in the positive direction. So I really like this company. I've been monitoring this, good decent dividend. And some of the trends, if you analyze it a little bit deeper, you could see there was a sideways turn. And this is a classic example how the box theory works. So when there is a sideways turn, I put this box theory, put the resistance and support level. Anything comes out of the resistance level, that's a point to invest in. So you should go up, it should come out of the resistance, then it will, its nature is to come back and hit the resistance again, and then if there's a pullback, that's the point to invest in. So this is an area where you invest. And you could see the same churn here. Again, it went up, again there is a downward turn and churn. There was one gap up which crossed the resistance level, which is 2693, came back, pulled back in, and again went back. So this is a confirmation that the buyers are ready to invest back into this company. That's a confirmation for us. So find those type of points. So especially if you're not sure when to enter in the sideways turn type of market, use this box theory. And if you have seen my previous video, I've explained it in every video about this box theory. It is a working model. Definitely try out some of these indicators or kind of strategies. Overall, the trend is in the positive direction. It's going to grow slowly, definitely. So if you're looking at the dividend based investments, some of these slow moving stocks are the better one to stay invested in. They're going to pay you on a quarterly basis dividends regularly. They're not going to move away from the dividend model. That's a good sign. Plus, at the same time, the price is also appreciating slowly. So you are getting a passive income on a quarterly basis. At the same time, your investment is also growing, and it is a decent size investment too. You can look at it. The dividend is 6%. And if you look at this particular company, it's called as a midstream company. Midstreams, basically the energy sector is companies who are dealing with the natural gas and crude oil. They've been classified as three levels: the higher level, higher stream, midstream, and lower stream. Higher stream companies, And low stream companies have more operating expenses. When you look at higher stream, they're basically looking at extraction, finding the right location, production, pulling the crude oil out. Those are those companies' functionalities. So they need heavy machineries, heavy what do you say, instruments or tools to pull or extract the oil out. And then the lower streams are basically where the refining processes, where they take this crude oil or the gas related stuff and they do refining part of it. So especially when you're looking at higher and lower streams, they have higher operating expenses versus the midstream. Midstream is mostly in the transportation business, storage business, and these things are like just holding the crude oil in one place or holding the natural gas in one place. uh, I would say decent operating expensive. They are less compared to lower and high streams. So find a midstream type of energy companies and invest in. That's where you could see a good steady growth. At the same time, some of these high and low stream companies have impact on the tariff. Tariff will have an impact on these companies. Geopolitical will have an impact. Some of the extraction policies, each government has their own policies. Green sector, climate change problems, those are some of the things impact some of these high and low stream companies, but the midstream always have a steady growth. So looking at the chart of late, if you look at it, there's a decent buyer versus seller agreement here. I like this model. I like this company because there is a synergy between buyer and seller. There is an equal number of distributions, equal number of accumulations too. So the buyers and sellers are just work together to grow the stock price. And I think this is, again, energy sector is a very mature sector. And overall, if you look at it, you could see regular distributions, regular accumulations happening, and that just tells you that both buyer and seller working together to get this price momentum going. Overall, this is a very good stock, good dividend, 6% dividend, and right now it is in a churn, sideways churn. So we should see again. I have the major box and a minor box. So it has just come out of the minor box. It came back again, hit the resistant level. We should see an upward trend going up. The next stop would be at 34, 38. Once it crosses, look for again pull back and then up again. So those are the indicators for us to invest in back into it. So if you're buying, if you're investing in this company, you can enter anytime. Look for some of the pullbacks and enter in. And if you are looking for a dividend based approach, this is a very good stock to invest in. As you see, they pay a very decent dividend too. And again, some of these things you could see box theory resistance. It has just come out of the resistance 2973, and you could see the positive direction. This is box theory works very well for this company. That's the overall trend I see. They've been in the market for a very long time. Very decent company. Try to invest and get taken advantage of the dividend they're paying. The next stock we want to talk about, again, this is a dividend based stock. It's a highly paying dividend stock. Again, we will discuss why I picked up the stock a little bit later. But the company name is Anley Capital Management. The ticker symbol is NLY. This company primary business is that they are in the mortgage business. They lend money to both commercial as well as the residential assets, as well as the it's actually a mortgage backed securities. Again, similar to some of the other banks, these are private lenders. They lend money, and yeah, whatever interest rates their customers are paying, they treat that as their income. So they're kind of interest based. They're both on the commercial as well as residential investments as well as financing. uh, Pretty decent company. It's been there in the market since 98. They've been doing something good to stay this longer in the market, and they capitalize some of those good retail upward trends in past 2 decades, 2 to 3 decades. If you look at it, uh, they capitalize some of those trends, real estate trends, and they've invested. Investors have invested money in this company now. But if you look at the overall trend, they've been in the stage three stagnation period for a very long time. They've seen a good steep movement, and after that, they are in the stagnation period. And since 2010 onwards, they have been always in the downward trend. And looking at this stock, they've been paying dividend consistently to all their investors. So they're not going to close the company and run away. They are paying decent sized dividend to all the customers, but the price appreciation is in the negative direction. So why I picked up this stock is that just to show you that if a company is paying you high dividend, that shouldn't be a criteria for you to go invest in. So you should look at some of those trends and see how they've been performing. what is their business model, what are the mistakes they're doing in their businesses, right? So to attract customers, they tend to increase their dividend. You're looking at 12% dividend, which is very attractive for investors. If you are a dividend based investor, 12% is very attractive dividend. People tend to carry it away with that percentage, looking at the yield, and then they go invest money. But if you see here, the overall trend is in a negative direction. So that's kind of a signal for you to be cautious on this company. But from the dividend paying standpoint, they've been paying well. There are a couple of earnings, negative earnings, and they're a decent positive earnings when the real estate was booming. In post pandemic, there was good growth for them. We have seen that is a time where you could invest. And similarly, why did I pick up the stock right now? Because if you look at this churn, I have this churn for past 2 years. Since Feb 2023 onwards, it was always in the sideways churn. It has just come out of my resistance. So the box theory, if you have seen the other previous slide too, same box theory, I have the resistance and support. It has come out of this resistance. It has a pullback here, and I should see a pullback. And if the trend is confirmed, in the sense, if the trend is in a positive direction, it should pull back to the resistance level 2116, and then again the positive momentum should pick up. If the positive momentum picks up, this is a good stock to invest in. So there's something going on in the real estate right now. It is slow growth. You have seen some of these lending companies are earning money. People are investing in their real estate. They're borrowing money from these banks and individual lenders, and that's the trend we are seeing. So past since February, you see that trend is actually changing. There's something going on in the real estate. So that's the reason I picked up. So it has come out of the base. That's my indicator to say that there's something happening here in this world. If the positive momentum gets confirmed after hitting the resistance, if it turns back, pulls into the positive direction, that's a point to invest in. So the next stop, if the positive momentum confirms, then the next point you're looking at 27 something. And then if still it pulls back again, the next stopping point would be 35 or 37. So that is a really good growth. So if the real estate boom is right now, I would say, if the real estate growth, not boom, we're not in the boom area right now. If the real estate growth is true right now, people are investing in the real estate business because all other sectors are doing really bad. If the real estate sector is better, it's going to see a positive direction, then some of these stocks, lending stocks, will also see a positive momentum in that direction. So that's why I picked up this decent size dividend. My bet on it is observe how the price movement is. Don't just blindly invest in, put all the money in this company. Watch out for good pullbacks and a positive trend, and then slowly invest in. And also know your next resistance and support level gradually. And you can pull back money out if you see a negative trend. So invest in a kind of a batch mode, and then see how the growth is. Overall dividend is good. So keep a watch on this particular stock. Thanks for watching my video. Stay tuned for more updates, more interesting topics to cover in the future. Until then, stay invested. Thank you. Bye.